If you've ever blown an Apex evaluation because of the brutal trailing drawdown, you're not alone. That rule has crushed more traders than any other, but today that ends. In this video, I'm going to show you exactly how to pass your Apex evaluation with complete confidence, using the same models that helped me secure over $1 million in funded accounts. You're going to learn 3 things today: which Apex account to buy and how to use the rules to your advantage, how to set up your account so it automatically locks in your profits for you, and I'm going to give you 3 trading models that can help you pass your eval in one single trade. If you watch this video to the end, you'll walk away knowing how to crush your next evaluation and finally get funded. Welcome to Maniac Trades, where we make futures trading simple, profitable, and fast. If you're serious about becoming a funded trader, hit subscribe and tune into our daily live stream every morning at 9:30 a.m. Eastern Standard Time, Monday through Friday, where we trade Apex accounts live in real time. Now let's dive in. Which Apex account to buy? Before we touch a single chart, we need to talk about account size and rules, because most traders fail before they even place a trade. The beauty of Apex is that they run crazy good sales on their evaluations. When the right promo is live, you can grab an evaluation for as low as $40 and sometimes even under $20. And if you've got the capital, you can stack multiple evaluations and pass 10, 15, or even 20 accounts in a single trade. But there are only 2 account sizes I recommend you even look at: the 25K account size and the 50K account size on Tradovate. I personally trade only the 50K account, and here's why. The drawdown to profit ratio is perfectly balanced. The 25K account has a 1-to-1 ratio with a smaller contract size. The 50K account gives you a slight edge to a 1 to 1.11 risk to reward ratio with a higher max contract size. For the rest of this video, we'll use the 50K Tradovate account as our example. If you're watching this right now and ready to get started, make sure you use code Maniac with the link down below to lock in the best discount on your Apex evaluation. Sometimes the discount can go as high as 90% off your eval cost, and most of the time it's around 80% off. That code always guarantees you the best discount available. Now let's talk about the rules you must master to pass the evaluation. Understanding the rules. First up, trailing drawdown. This one trips every trader up. Unlike most firms that use end of day drawdown, Apex uses a trailing drawdown model. Here's what this means if you're not familiar with it. Your drawdown will move with you in your unrealized gains on your trades. So if you start with a 50K account, your drawdown begins at $2,500. That is your maximum loss limit. Let's say you open a trade and your unrealized profits hits $1,500 on that trade, but you close the trade for only a $500 realized gain. That means your drawdown just moved up by $1,000, leaving you only $1,500 of room, and $1,500 is now your max loss limit, not $2,500. That's why traders think they're safe, then suddenly fail the eval. But once you understand how this works, you can play it smart and never get caught again. Next, the profit goal. For our 50K account, your target is $3,000. Do not overtrade and do not chase more than $3,000. Profits don't carry over to your funded account, so your goal is to hit 3K and get out of the market. Finally, max contract size. You cannot trade more than 10 minis or 100 micros on a 50K account. If you exceed that, it's an instant fail and you'll have to repurchase an evaluation. Account setup. Now let's make sure your Tradovate account is locked, loaded, and ready to protect your profits. After you buy your Apex eval, log into Tradovate and sign all required documents. Make sure you sign as a non-professional trader. Then open your account settings and activate every free add-on, especially the TradingView integration. That's how we'll execute trades for this video on TradingView. Next, set your daily profit trigger to $3,020, not $3,000 flat. That ensures your account auto liquidates as soon as you hit the goal and locks in your evaluation pass automatically. We add the extra $20 buffer because auto liquidation isn't perfect to the cent. This small adjustment keeps your account safe from any errors. Once that's done, link your Tradovate to your TradingView account in the trading panel and you're ready to trade directly from your charts. The trading models. Now for the fun part, the trading setups that make passing Apex almost effortless. These are the exact models that helped me secure over $1 million in funded accounts. They're designed to be clean, simple, and powerful. But first, 3 quick rules of engagement. Rule number 1, only trade these setups at 9:30 a.m. Eastern Standard Time, the New York Open, and and during that New York trading session. Timing is everything. Avoid the Asia session or random midday setups. Your win rate will drop dramatically on these models. Rule number 2, trade only the NASDAQ. The ticker NQ1 exclamation mark is the one we use. It's volatile, liquid, and perfect for these models. Rule number 3, nothing is guaranteed. We are not guaranteeing you success, but giving you the tools we've used to lock in over $1 million in funding on Apex. It's up to you to use the tools properly. Ready? All right, let's get into them. Model number 1, the 5-minute trigger. This is your go-to setup for quick funding opportunities, especially for beginners. It's simple enough for beginners, but still sharp enough for the pros. The idea is to look for a clean 5-minute inverse fair value gap that lines up with liquidity and structure. When you see that imbalance, you're watching the market show its hand, and that's your trigger. Here are 3 key confirmations to boost the probability of this model. A liquidity sweep on the 5-minute or higher time frame, like the 15 or the 1 hour. A sweep of session highs or lows, like the Asia range or London range. A clean break of structure confirming the shift in momentum on the charts. Get all 3 of these and you're looking at a high probability setup that can close your eval in 1 move. Now let's break down the model with a real chart example.
Let's give you this real chart example. Market open candle is right here. This is your 9:30 a.m. candle, and our rule is you cannot look for a trade until that market candle has presented itself and completely formed. As you can see, price is pushed down at market open, giving us no trade opportunities until in this area right here. Now, we have a 5-minute inverse fair value gap right here on this 10:15 a.m. candle, but that is not a valid entry for us. Why? Because we don't have that liquidity sweep and we don't have an indication that price is ready to continue upwards. So what do we wait for? We get this first indication that, hey, price might be flipping on us now. Then price comes down and sweeps this low here. You can see my little line that I formed here with the dollar signs. We have a liquidity sweep. Now, as we can see here also, price formed a fair value gap to the downside, giving us an opportunity to be patient to wait for the 5-minute trigger to present itself. And as you can see here at the 10:45 a.m. candle, we finally get a 5-minute inversion. Now we have to use the Fibonacci tool to get our proper entry for this model. So steal my settings, pause the video, and steal these settings on my Fibonacci tool so then you can use it on your charts. Now, if it's a bullish candle inversion, we only focus on the candle that actually inverted the fair value gap. If it's bullish, we go from the bottom of the candle to the top of the candle. If it's bearish, we go from the bottom of the candle to the top of the candle like this. So if it's a bearish inversion, we go from the top of the candle to the bottom. If it's bullish, we go from the bottom of the candle to the top. And this is a bullish inversion, so we're going to go from the bottom to the top of the candle. Now, what's important is where did the candle close? As you can see here, there's 3 red lines. Each of these red lines is an entry marker for us dependent on where the candle closes. And as you can see here, this candle closed below the bright red line here. So our entry would go at this next red line right below it, the 702 line. So that's where our entry would go. Let's get that set up. So now that we have the inverse fair value gap confirmed, we have our Fibonacci tracement tool traced out on our candle, and we have our limit order in at the exact line we need to enter at. Let's see if we get tapped in, and let's see if we get this funded account. Boom, we got tapped in on the very first candle, and now we have our position ready to go. Our stop loss goes down to the liquidity sweep, and our TP would go to 2R, but let's see where $3,000 is. $3,030 is right there. We're almost to a funded account. Boom, your account just got funded right here on this candle. You just hit your $3,000 mark, and you are now a funded trader who has locked in a funded account and can now grow and potentially get a payout.
Model 2, the sniper's trap. This one is a little more tactical of the models. It's all about patience and precision, letting the market set the bait before you strike. You're waiting for price to run liquidity, show exhaustion, then trap traders on the wrong side of the market. Once the trap snaps, you're the sniper taking the high reward entry. Here are 3 confirmations to boost your probability. A inverse fair value gap before the trap forms, a clear liquidity sweep on the 5-minute chart or higher time frames, a decisive break of structure confirming that shift of momentum. The sniper's trap rewards traders who can wait for the perfect moment, the ones who strike once, clean, and walk away with profit in minutes. Now let's break down the model with a real chart example.
All right, let's get into this real chart example of the sniper's trap. This one requires some patience and some diligence on the market. So make make sure you take notes of what I'm about to show you, and let's get into it. Again, one of our main rules is we wait for that market open candle to form. The market open candle has formed, price went down just like the previous model. This is the same move, just a different entry model that you could have used. So we had this inverse fair value gap, right? Price inverted that fair value, came down and gave a liquidity sweep. Now, unlike the 5-minute trigger that gave you an entry way up here, there's 3 different ways you can enter a sniper's trap. You could be very aggressive, moderate, or a little bit more conservative on your entry. With the sniper's trap, you can enter off the first bullish candle or bearish candle, depending on the direction of the liquidity sweep, that forms after you get that liquidity sweep confirmation. For example, this is what your trade would look like. You would market buy on this first bullish candle after the liquidity sweep and after the inverse fair value gap. You got 2 confirmations there that boost your probabilities that this trade will work. So let's put in that order and see if we get a funded account. There, our order is in. We took 3 contracts on this position. Stop loss goes to liquidity sweep and TP goes to get a funded account. We need to hit right under our 2R position. So let's see if we're able to capture this funded account. Boom. You officially got a funded account off the sniper's trap. You got an aggressive entry and then nice confirmations even after with the inverse fair value gap, order blocks, fair value gaps that boost your confidence in that you're getting a funded account today. Let's go over some of the other entry opportunities within the sniper's trap. Now, what you can also wait for with the sniper's trap is a liquidity sweep and then wait for a fair value gap to form to the upside before you take a position. So here we have the liquidity sweep. Instead of taking the aggressive position, we're going to wait for displacement and a fair value gap. We had the fair value gap right here. Our buy limit would go at the top of this fair value gap, and we wait for the fair value gap to be retested before we take our position. So let's set this position up right now. Our position is set up. Our buy limit goes to the top of the fair value gap, stop loss at the liquidity sweep, and we shoot for 2R. Let's see how this trade plays out. Boom. First candle here, you're tapped in. Again, our stop loss goes down to the liquidity sweep, and we only need to shoot for right about there. We don't even have to hit our 2R target. We need just to here that gives us our $3,000 to lock in a funded account. Let's see if we get locked in for this funded account. Boom. As you can see right there, you are now a funded trader based on the fair value gap entry with the sniper's trap. Now let me give you the final entry that you can use in order to utilize the sniper's trap. That is also the most conservative way of taking this trade opportunity. Now, the last and final entry you can do with the sniper's trap is you can wait for that fair value gap to get tested and then wait for an order block on the 5-minute. And as you can see right here on this 10:45 a.m. candle, you get this order block. And then not only with the order block, you also get a 5-minute inverse fair value gap right here on top of that. So you have a lot of confluences here on your side telling you you're going to the right side of the market. So let's set up that buy limit order and see if we can get a funded account based on the order block entry. Stop loss for this one also would go to liquidity sweep, and then we shoot for 2R. But like I've said before, you don't even need that because you'll get funded before that. So price moved up a little bit, but then retraced back down perfectly into your order block, tapping you in. Stop loss goes to liquidity sweep, and let's see how high we need in order to get a funded account. All right, let's see if we're able to lock in another eval on this position. I mean, we're already green $1,100 on this trade with the perfect tap in on that order block. Let's see how it plays out and if we can get a funded account. Boom. Position is closed. You have locked in another funded account. So that's the sniper's trap. Let's get to the next model, the 1-minute kill shot.
Model 3, the 1-minute kill shot. This is my personal favorite and my signature setup. The 1-minute kill shot combines multiple time frames to find sniper entries at major points of interest. Here's how you identify this model. Wait for liquidity to get swept at a higher time frame level, which for us, we use the 5-minute time frame. Look for a massive, obvious rejection wick, not a small one, a clear, aggressive wick off a level. Then drop down to the 1-minute time frame and catch the first inverse fair value gap on the 1-minute time frame after the liquidity sweep. When all 3 align, that's your kill shot. One trade can pass your evaluation and set the tone for your funded journey. Now let's break down the model with a real example on the charts.
Let's get into this real chart example of the 1-minute kill shot. Like I said, this is my favorite one. You'll see how sniper entry these are. It is a 1-minute kill shot, and it's named that for a reason. Let's show you what it is. Okay, just like the other ones, we're using the same market setup just to give you a repetition and knowledge of what we're looking for. So price, again, we wait for that market open candle. I cannot stress that enough. You wait for that market open to form. You do not open a trade before that. Price has moved down. We've inverted a fair value gap here on this move up. Boom. We don't wait for that bullish candle. We wait for a liquidity sweep on the first one right here. This 5-minute candle closes, fails to close below these wicks here. So now we do not stay on the 5-minute. We actually drop down to the 1-minute time frame. We stop we start on the 5-minute, wait for 5-minute inversions, and wait for a 5-minute liquidity sweep, and then we drop down to the 1 minute. So let's drop down to the 1 minute now. Now, what are we looking for on the 1 minute time frame? We have this liquidity sweep down here on the 5-minute time frame. So now what I'm looking for is the 1 minute to invert a fair value gap on the 1 minute time frame. We have this fair value gap right here on the 1 minute time frame after the 5-minute liquidity sweep. Let's see if we get an inversion on that fair value gap. All right, here we go. This 10:34 a.m. candle has officially inverted that fair value gap. Now what do? We set our buy limit at the top of that inverted fair value gap. Stop loss goes to the bottom of the liquidity sweep, and then we target a 2R. Let's see if we get tapped in. Boom, our position is tapped in on the very next candle. Pixel perfect. Let's put our stop loss down at that liquidity sweep, and let's see how far we got to target. So this one still, we do not even need a full 2R in order to get our funded account. We're a little bit under it, but still it's pretty much the same. So let's see if we're able to get that funded account. And boom, just like that, you're able to lock in a funded account. This one, if we go to the 5-minute time frame, look how sniper of an entry it is. It's lower than just market buying that 5-minute candle, and you get great risk to reward on this 1 minute kill shot. It is by far my favorite entry model. It has been tried and true on Bitcoin, NASDAQ, and many other assets. It's my favorite, and it locks in evals very easily. As you can see right here, you would have gotten that eval locked in almost immediately. So there you go, guys. There's our 3 trading models.
And that's your complete master plan for passing Apex evaluations fast, smart, and with confidence. If this helped you, use code Maniac with the link in the description to lock in the best possible deal on your evaluations, and sometimes that discount is up to 90% off. That code will always guarantee you're getting the max discount available every single time. Now, once you get funded, make sure you tag me on social media at Maniac Trades. I love seeing you guys win. And if you want to watch me trade these setups live, subscribe right now and catch the morning live stream at 9:30 a.m. Eastern Standard Time, Monday through Friday. This is Maniac Trades, where we make futures trading simple, profitable, and fast. Now go pass that eval.